Hello and welcome to this week's Profit Maximizer Moment. This show is dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now. I'm your host and coach, Wayne Belisle. I'm also the founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS. Sorry, need to take a breath in there somewhere, huh? I do that with our profit coaching programs and our tax planning systems, which have saved my clients over $6.8 million over the last 5 years. Truthfully, we're over $7 million. Like I say every time, no, I love my clients, but don't want to share a jail cell with them. Today, we're going to take a little bit of break from talking about increasing profits. This one is, though, we're going to talk about the employee retention credit. Now, I've covered this in the past when this was first going live. So we're talking about well over a year ago, a couple of years ago, really, and we covered it again in 2021. But there's some things, some recent developments, and some things that I want to go over. But first, support for today's show is brought to you by Profit Maximizing Publishing. I will get this straight sometime, some year, which published my book, The 90-Day Profit Reset, which shows you how to gain your independence from reduced cash flow, shrinking margins, and evaporating customer base. In this book, you will find chapter after chapter, idea after idea, about how you can turn around your business, reset your profits from red to black in 90 days or fewer. Even entrepreneurs who are making entrepreneurs, I can say that word, who are making money can learn from this book. All right, what's the employee retention credit? Well, there's a couple things we want to get into that I want to talk about for sure. First, people are confusing it with the PPP loan. It is not the PPP loan. The PPP loan was something that you had, it was a loan you took out. If you did certain things, you could get it forgiven. This is a credit against employment taxes. It's really pretty simple. It's a refundable credit. We're going to get into that in a minute because it's taken 6 to 8 months to get the refund, but at least you're getting the refund. But you have to do some things. Now, what I've been seeing is that amazingly, I'm picking up new clients and I'm asking, and almost none of them, their prior tax preparer or has even talked to them about the employee retention credit. So it's amazing how many of them don't even know about it. All right. So that's one thing. It can be worth a lot of money. I mean, I've had some get hundreds of thousands of dollars, and that's not just one or two. That's quite a few. Lowest I've seen maybe is in the $7,000 to $10,000 range. It amazingly, what I've been surprised about is probably 60 to 70% of clients are qualifying for it, which surprises me. I really thought it would be much less than that. I thought it would mainly be my restaurants and my bars and people that were, party halls, something like that were seasonal. But it really ended up being just about any business. Matter of fact, a lot of my construction businesses are qualifying because if you think about it, what I need for the big one, let's talk about 2021, I needed a 20% drop in any quarter when you compare 2021 to 2019. Well, in construction, I've had more than one example where in 2019 they did a big job in the second quarter, but in the second quarter of 2021 they didn't. They did their big job on 2019 in the third quarter of 2021. So all of a sudden they qualified. So we're looking at it every time we do a tax return, even the ones that are on extensions for 2021, we're doing a comparison and then filing an amended return, which leads us to the next thing. How much is it? Well, it's different in both. Here's, in 2020, I had to have either a 50% drop or I had to have what they call a substantial, what was the wording so that I get it right? Well, I had to meet the suspended operations test, which gets complicated. I'm simplifying stuff here dramatically. You have to understand, this originally came out in the March law. Most of us ignored it because you had to decide whether to get the PPP loan or the ERC, the employee retention credit. And most people did the PPP because it was the easiest one to get and funded quickly. And you got the money right away and you could easily, I don't have anybody who didn't get it forgiven. Okay. December of 2020, it was changed and added the first 2 quarters of 2021. It also, in March, it was changed again and added the next 2 quarters of 2021, but also made it where you could do both the employee retention credit and the PPP loan at the same time. So there was a change. And then late last year, I don't remember if it was September or October, in order to pay a little bit for the, one of the stimulus bills. I don't even know which one it was. After a while, they all run together in my head. I don't remember what it was attached to. They took away the fourth quarter. And just to throw a little wrinkle, if you started your business after a certain date in 2020, you could qualify for the fourth quarter of 2021, even the third and fourth quarter, up to $100,000. Even if you, even though they got rid of the fourth quarter, they left that special there. Does it sound confusing? Yeah, it is. The law is continuously changing. So a couple things. You need to make sure you are working with somebody that's stayed current on it and has done a lot of them. But you need to make sure that if you haven't looked at it, you need to see if you qualify. Call your tax preparer, and if they're not willing to do it, we've done so many, we can do them. All right, you just give us a holler. Another thing to be careful about before I get into, and like I said, this is complicated, so I'm just going to give you the basics. But one of the things I've been running into is there's starting to be some firms that are doing telecalls. They're just calling businesses and going, hey, you could qualify for this. How do I know? I have some of my clients calling me, and it's like, hey, do I qualify for this? I had a doctor. Yeah, we've already filed for it. Okay. No, so, be careful, because they tend to be charging almost, I've heard 15 to 25%, which I'm not even sure is legal technically. If you're filing an original document, which an amended return would be, then it technically would be probably not legal if you're operating in front of the IRS. But that's neither here nor there. It shouldn't cost you that much. We tend to do a fixed fee. It's not cheap because there's a lot of work involved in it, and there's some risk involved too, and knowledge. All right. Second thing, you have time. All right. One of the things is that we can go back and amend the tax return up to 3 years after 3 years from the April 15th following the year that the returns need to be amended. So for 2020, which isn't very much, 2020, the credit was up to 50%, up to $10,000 or something like 70%. My brain just stopped. But it was per year. So plus, you have to coordinate it with the PPP loan. You can't use the same wages. 2021 is where it got big. It's 70% of the first $10,000 of pay per employee per quarter. So I could literally get $28,000 per employee if $21,000 because I got rid of the fourth quarter per employee if you qualified for all 3 quarters. I'm not going to get into the craziness of it, but here's the other problem. Once I can amend the return all the way up for 2021, all the way up to April 15th of 2025. Now for the third quarter, I actually have 2 more years after that. Okay, because that was a change that was in I want to say the March change. Can't remember which one it was in. Bad news, it's taking time for the IRS to get these refunds out. They're taking 6 to 8 months after we file them. But like I just did one, it was $70,000. It was free money. Somebody we did a tax return for, and hey, we looked, you qualified. All right, I got one that I'm pretty sure they're going to qualify for even more than that. So again, you look at it, see if you qualify. Could easily do work for you. I mean, it can be real money. And yes, you're going to have to wait 6 to 8 months to get it. Now, what usually ends up happening is first you get a letter from the IRS that says, hey, we changed your account and you have a credit balance. Now, if you owe money on anything, they're going to take it out of that first. Okay, understand that. Once you get the letter, it's taken a week to 2 weeks to get the check. But they're processing them, and they seem to be getting a little bit faster at it. Now, what are the steps to the employee retention credit? Well, the first thing is, one, to determine whether your business meets either the suspended operations test or the decline in gross receipts test. The suspended operations test is basically you are forced to close. And there's a websites in each city. We do the research and find out when you are closed. Bars in El Paso pretty much qualify for all the quarters, the last 3 quarters in 2020, but most in 2021 didn't. And then you have the decline in gross receipts test. That's the one where we get. If you had a 20% drop in 21 sales versus 19 sales using the same method you use on your tax return, all right, then you qualify. Here's the good news. If you qualify for one quarter, you automatically qualify for the next quarter, all right? One thing to look at too, by the way, you can check your fourth quarter of 2020, and if you're 20% down from 2019, you're not 50% down, so you don't qualify for the fourth quarter of 2020, but you automatically qualify for the first quarter of 2021. Yeah, crazy, stupid. I've told you this stuff is bad. So once you figure out that you qualify, you then calculate your total qualified wages. Got to be careful about this. Family doesn't always count. You only get wages up to the first 10,000. Once you figure out the qualified wages, you multiply that times 70%, and that's what you're getting. So you calculate your ERC using the rate applicable for that quarter. For 2021, it was 70%. You receive your credit either by getting an advance payment or claiming a refund when you file your Form 941 quarterly payroll returns. Kind of too late for that. That's why you're having to do it. When we could do it, we did them with the payroll return and had people stop making their deposits. But if you haven't done it by now, your only option is to do an amended return and wait to 6 months. One problem with the employee retention credit as opposed to the PPP loan. The PPP loan, the money you received was not taxable. The employee retention credit, you have to reduce your wage expense on your income tax return by the amount you receive. So technically it's taxable. All right. So there's a lot here. First thing, you should check. All right. Get with somebody that knows what they're doing on that, send it to us, whatever, we'll work with you. But find somebody who's done a few of these and find out if you qualify. Because if you qualify, it's basically free money. All right. So, that's the way it is. It is way too complicated for anybody to do this themselves, unless, you stayed current on it, and, or an accountant or something like that. But most likely you're going to need help on it. But understand, you have time. That's the biggest thing I was going to get after is we have some time. So you have not missed out. It's not like the PPP loan that when the money was gone, too late. Even if you qualified, you couldn't get it. It's not like that at all. This is a credit against your taxes, and if you qualify, you do the amended return and you get it. All right. We'll come back next week and we'll get back into some of the profit tips that we were talking about. But this one was important enough, and I've seen quite a bit this year. I've done a lot more than I thought I would. I thought I would be done with it, but we keep running into people who are qualified, and usually it's in the $60,000 to $200,000 range that we're getting them back. So, hey, until next time, this is Wayne Belial saying, let's make this our most profitable year ever. Thank you very much, and have a really good